if you leverage those minuscule tasks of cutting the grass and or whatever other small tasks you have, and you leverage that and you pay somebody to do that, and you focus on the big picture mindset, let go of the little stuff and focus on the stuff bringing in the revenue, and leveraging those little things really helped me scale.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Adrian Pannozzo has completed 21 years of working on the police department. He is now a full-time real estate investor and an entrepreneur with multiple companies. Adrian, welcome to the show.
Hey, Sam. Thanks for having me.
Hey, pleasure's mine. 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
Yeah, I started 10 years ago with the police department, working full-time, bought my first rental property with the mindset I want to have 1 or 2 to subsidize my pension when I retire. And 10 years later, let's fast forward, I'm now the owner of 368 units, which is equivalent to 68 multifamily homes.
Wow, 368 units. What has been, or what was probably the tool or the method that you used that was most effective at helping you scale to 368 units?
2 things. Firstly, joint venture partnerships. Sooner or later, you run out of your own capital, right? And secondly, incorporating the BRRRR strategy on all of our acquisitions, which helped us rinse and repeat a lot of capital through various projects over the course of the 10 years.
Can you talk to me about the structure of your JV partnerships? How did you come up with the idea? And then how did you finally get that first JV deal inked? I mean, it seems like that's a common hurdle for people. They want to know, hey, I think it'd be great to JV with somebody. I need $500,000, $1 million, let's bring on a JV partner, whatever it is, but they don't know how to do that. How did you do it?
Yeah, so we obviously plateaued with our lending capabilities. So we wanted to continue, and I say me, and meaning my wife and I, we wanted to continue to invest and continue to build our portfolio. We were having great success. So ultimately, we started marketing ourselves. We've been in the industry now for about 5 years, give or take, developed a bit of a team, a bit of a strategy, had some great success stories that we were able to share. We had that experience behind us that we were able to share with potential JV partners, basically giving them our history and how successful we've been, and the rest was history.
How did you identify the potential JV partners?
Through marketing, people started, through our marketing efforts, we started to attract people who would reach out via phone, via email. Hey, I just saw this or that. I'd love to connect and have coffee and, pick your brain, and maybe we're a good fit to work together. So that's how it kind of all started. They approached us, potential investors approached us saying, we have this money, we want to invest in real estate. You obviously know what you're doing. We don't have the time, the knowledge, the experience, the power team. We definitely want to invest with you and your team. Boom. All right.
That's great. I love that. Can you give us an explicit example of how you structured that? How did you make it a win for the general or the JV partner, and then how did you make it a win for yourself?
Yeah. So we obviously are considered the sweat equity partner,
right? And
the joint venture is the capital injection partner.
Right.
So we structured it. They're bringing capital. We're executing with our team, with our power team, utilizing the BRRRR strategy on the acquisition. And essentially, when we're running numbers and promoting a particular project, we're promoting it and running the numbers with the partner, showing them essentially 80, 90, 100% yield ROI on your capital. So it wasn't a hard sell when you're preaching and you're showing we can get you 80, 90% ROI. Most people are pretty attracted to that. And we have had and have the statistics behind us to show you we've done this time and time again.
Right. Yeah, that's really interesting. Tell me, if you're implementing the BRRRR strategy, were you cashing these investors out at refinance and they stayed in the deal, or was it that you cashed them out and then, they're out of the deal?
No, they remained in the deal. So at the back end, we cash them out after the refi. They get their capital back, and essentially, in exchange for our sweat equity and expertise, we then would own anywhere between 40 and 50% of that property.
Right. And so if you own 40 or 50% of it, you're just splitting whatever that pro rata share is that you own. That's the amount you take out of it, and then they take the rest of it.
Right.
That's really, really cool. So when you say 68 multifamily homes, what do you mean by that? Are you talking duplexes, triplexes? Can you define that term for me?
Yeah. So our smallest acquisition is a triplex. And our biggest one is a 45-unit purpose-built apartment building.
When you say
it varies.
Go ahead. I'm sorry.
Yeah, sorry. It varies right from the smallest acquisition of the triplex all the way up to 45 units.
Right.
And everything in between.
Got it. Okay. No, that's really cool. That helps kind of put some color to that, because I wasn't quite sure what you meant by that. When you say purpose-built, what does that mean?
Just, your typical square apartment building, that it was, as opposed to like a factory that's been converted to residential space. This was built, your typical square apartment building. It was built for multifamily. It was built as an apartment building. That's what I meant by that.
What have been some things that you feel like you've done that have really accelerated, we give this both sides of this question, accelerated your growth? Obviously, joint venturing is one of them, but what's something else you feel like you've done right? And then what's a mistake maybe you've made that you could help our listeners avoid?
We've just been really fortunate, really, with, delivering smashing deals and having that expertise with the BRRRR to attract new referrals. And we do a lot of business through referrals. So having the meat and potatoes and delivering those returns, it's pretty easy, to be honest with you, to attract like-minded entrepreneurs who know they want to put their money in real estate, but just don't have the time or the expertise.
Right.
One of the mistakes, we had a lot of challenges. So when we started, we were subbing out a lot of our construction for our BRRRR projects to different contractors, and we got burnt. I probably lost about, in my career, maybe 150K by getting burnt by, fly-by-night contractors that we decided to go on Kijiji and hire when we first started. We've since grown, obviously, in the 10 years, and now we have our own construction company, in-house construction, that facilitates all of our renovations. So we keep that very tight as opposed to going outsourcing all these people. They're all now on our payroll, so to speak, and we're able to control that a lot better. Yeah,
no, that's absolutely key, and I hear that quite a bit. I mean, it's not, unfortunately, an uncommon thing where people have been burned in the contracting world. So you guys then, I would imagine, it's a separate construction company, but it's still controlled by you guys, and then that construction company then comes in and does the work for the actual project itself. That's really, really cool. I love it. When you think about your friends who work in the police department, I mean, how many of them look at you and just go, wait, what's he doing?
Yeah, so we've actually joint ventured on probably a dozen of our projects last year in 2021 with former colleagues in the police department who, yes, follow us on our social media platforms and see everything we're doing and the massive growth we've had and whatnot. And they've jumped on board and they said, if it worked for you and you're guiding it, and we have that brotherhood connection from my previous career, and we're off to the races.
Yeah, no, that's really, really cool. So we've talked a little bit about the types of units you buy, how you're structuring them, how you've gotten this far. Where do you want this company to go in 5 to 10 years, and what steps do you think you're going to take to get there?
Well, I think we have a very solid foundation, given the amount of units we have now, given our level of experience, given our in-house construction, in-house property management to facilitate everything, essentially offering hands-free, hassle-free real estate investing. We do it all, while our partners sit home and take care of their families and whatnot. Where do we see it? We have that foundation. It'd be nice in 5 years to have 1,000 units, and ultimately creating this generational wealth that really is our slogan for families out there to reap the rewards that real estate investing can offer you, long-term wealth. So 5 years from now, I'd love to have 1,000 units, to answer your question.
Toronto isn't exactly known as an inexpensive place to buy real estate. How are you guys finding opportunity?
So we're just on the outskirts of Toronto, where we do a lot of business in a city called Hamilton, Ontario, which is probably 40 minutes west of Toronto.
Okay.
Downtown Toronto. So we're not too far. You hop on the transit, for example, if you're working downtown TO, you're there in 40 minutes. So a lot of our young professional tenants are making that commute. Prices are a lot more affordable 45 minutes outside of Toronto. So we're making the numbers work better, providing, these kinds of returns, providing every acquisition we have cash flows, so we have the cash flow coming in, and obviously debt pay down from the tenants, the appreciation happening in the background, all with delivering 80-90% ROI on their money. I mean, it's quite attractive.
Absolutely. What are some digital tools or resources? I mean, is there management software? Is there things that you've employed on the technology side that helps you?
So our in-house property management company, we do have technology for that manages our profit, our loss. We have really, given the size we are now, and the let's call it our sister companies that we have on the go and whatnot, I leverage a lot of my administrative tasks to in-house bookkeeping, in-house accountants, so on and so on and so on. So I'm really not up to snuff on all the other stuff happening in the background, controlling all the administrative tasks within the I'd like to call it an organization, because we have sister companies that are all working in unison, producing these kind of returns for our investors. So yeah, I'm not too up to snuff on the administrative side of things. I'm just more of the guy trying to continue to grow the business and having that relationship with our joint venture partners.
Yeah. So it sounds like you've taken on the more leadership role in the company, kind of steering the company. Sure. What was that transition like from when you were in the trenches? Because I know everyone's been there. That's the title of the show, is How to Scale. Everybody's been there, where it's like, hey man, we're signing loan docs. Oh yeah, we're posting something on Instagram or LinkedIn, or hey, we're doing this and that and the other. How did you get yourself out of the lower, I'm calling them lower level tasks? They're not lower level, but how'd you get them out of that so that you can kind of zoom out and then grow your company?
Mindset. We all started, like you said, in the trenches, and so did I. I was the guy, showing the apartments back in the day to the prospective tenants, driving around with the lawnmower in my trunk, cutting the grass at all these places, so on and so on. And, I hired a business coach, and my business coach helped me scale as well, and basically taught me the power of leverage. If you leverage those minuscule tasks of cutting the grass and or whatever other small tasks you have, and you leverage that and you pay somebody to do that, and you focus on the big picture mindset, let go of the little stuff and focus on the stuff bringing in the revenue, and leveraging those little things really helped me scale. And obviously, again, with the advice and direction and consultation with our business coach.
Yeah, and that's really, really key there. I love that. I mean, because it's the same way we use leverage, as debt on our properties. It's the same type of leverage we have to use when bringing on other teammates and people like that, because without it, the returns just aren't going to be there. So that's absolutely fantastic. Adrian, I've really enjoyed this. Thank you for taking the time to come on today, break down what it is you guys are doing, how you've gotten there. I think it's really cool. I love hearing stories where someone is, hey, I was 21 year, police, worked in the police department, and then I went out and did something entirely different. And I think that speaks to your obvious get it done mentality, and also the just the courage to go out and try something completely new. There's many people, like to your point about mindset, that just say, man, I can't do that. And as I always tell my son, if you say you can't, you're right. So I love love what you're doing here, and certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Shoot me an email, Adrian, Adrian, at investwithepc.com. Quickest and easiest way. We're all over social media. If you just put in our Instagram, Facebook, LinkedIn, just put in Executive Properties Capital or my name, Adrian Pannozzo, very searchable on the social media platform, and see what we're doing. And we can have a chat.
Fantastic. Yeah, and we'll make sure we get all of those notes or all those links there in the show notes as well. Adrian, thank you again for your time. I do appreciate it.
Cheers. Thank you.